Welcome back. It's been 3 days we have been uploaded a video in YouTube, and so due to my personal commitment, have to allocate. I need to allocate time for that. So year after, there will be continuous videos on this channel regularly without any gap or break. Okay, today I have brought one comprehensive problem from Schedule 3 Division 1 from corporate accounting. There is a short question from this chapter, and we can easily score 14 marks out of this question. And this chapter is all about these two formats: this name of the company, balance sheet, right? This balance sheet and statement of profit and loss. So the entire question revolves around these two statement alone. I have just copy pasted the uh, table from the book without writing it, so it will take a lot of time. So I've just copy pasted the format. You can memorize this format. That's compulsory. You have to memorize it. You can use any type of memorization techniques, mnemonics or lullabies. So whatever you do, but you have to memorize this statement as it is in the book. Okay. So okay, what the balance sheet statement is? Balance sheet will tell us about the equity and liabilities. Equity part takes from here to here, and from here to here, that is a liability area. Okay, and asset starts from here to here. Okay, there are assets can be split into non-current assets and non-current liabilities. Non-current assets start here. Non-current assets from here. Current assets starts from here. Current liability starts from here, and non-current liability starts from here. There are four items, barely 5 or 6 items. That's it in balance sheet. And when it comes to profit and loss account, from the regular sole proprietor final accounts, right? The sole proprietor file accounts comprises every information which is anonymous and not categorized. But schedule 3 is a categorized one of final accounts. We are going to categorize the any expense that arise in the business. We are categorizing into the head, and any head is not specific. We have put it under the general head of like other current assets, non-current assets, other current liabilities, non-current liabilities. Like we are just categorize in a generalized manner. So if it is specific, we are going to arrange it under short-term borrowings, short-term trade payables. If it is general, we are going to use other current liabilities. So I hope you guys have a little clarity about this. Okay, I'll just go through this for your understanding. The first one is uh, equity and liabilities, right? Equity and liabilities contains shareholders funds and liabilities. Okay, shareholders funds majorly covers the area of share capital share capital, reserves and surplus, money received against share warrants, and share application money pending allotment. The share capital is the actual the share capital we have in our business. If there is any calls in it, that has to be deducted, and the net paid up capital only we have in here. Okay, and reserves and surplus is the any reserves we have in our business, like general reserves or revaluation reserve, securities premium reserve. Any reserve we have to total it and we have to show it here. Okay, and money received against share warrants. Money received against share warrants is a tokenized system of allocating shares. So if we have sold any shares if I have sold any shares through tokenized system, for that money we receive for the token, right? So that has to be come here. And any share application money pending allotment. So we have received the application money, we are pending with the allotment, then it has to be come here. Okay, then non-current liabilities we can use the mnemonic like yaksha. Wait, yaksha, sha, re, mo, sha, no, ote. This is like a song you can memorize. And lodi hote, loku, show, tra hote short term. I've just one Hindi song. I just took one Hindi song from movie, and I just create a lullaby with this with the format. So yaksha share mosha no hote lodi hote lokusha tra hote shatam. So this is the lullaby I have created. I've just write the lullaby here. Yaksha sha re mosha no hote lodi hote lokusha tra hote shatam. So this is the lullaby I have created for that's a Didi Dera Devar Divana song, right? So I have created this song with that same tone. Iksha Share Mosha no hote Lodi hote Lokusha. Iksha Share Mosha no hote Lodi hote Lokusha Tra hote Shatam. So that's how the lullaby sound will be like. And let's go to assets. For assets, Asno PP Pikindi Lohote Kurkurin Inventra Casho Hote. I think there is one other item which is cash, other current asset that is actually not here in this table. 1 minute. There is other current assets which has to be come here at the last, that has been missed in the format table. Okay, this is F, that is B26 Casho Hote. So you can easily remind like Iksha Share Mosha no hote Lodi hote Lokusha Tra hote short term. Next for assets, Asno PP sorry, Asno PP Pikindili hote Kurkurin Inventra Casho hote. So this is how the song is. You can, if you are familiar, if you are easy to understand this, you can take this, otherwise leave. This is just for my memorization I have created this. So if you are okay with that, you can take, otherwise leave, and you can use your own methods. Okay, so this is the memorization techniques that which I have used for balance sheet. When it comes to, okay, I'll just go through the items in comes under non-current liabilities. Non-current liabilities comprises long-term borrowings, which is most likely debentures, deferred tax liabilities. This is uh, if there is any upcoming period liabilities which we have in our current books, that has to be come here. Other long-term liabilities, long-term provisions, and short-term borrowings, state payables, other current liabilities, short-term provisions comes under current liabilities. For current assets, for assets which is purely splitted into non-current assets and current assets. Okay, non-current assets has PPE and intangible assets. PPE, intangible assets, capital P, WIP, and intangible assets under development. And non-current assets, deferred tax assets, long-term loans and advances. Other non-current assets are some of the other non-current assets hearing which has came there. Okay, and the current assets comprises current investments, current inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. Okay, revenue from operations, other incomes, and these are all the total income part. Any incomes which the company is earning, that has to come here. Okay, that has to come here, and this is we can understand by using CPC EFD other. This is the easy mnemonic for this CPC EFD other. So cost of material consumed we are going to use here, and the purchase of stock in trade, changes in inventories of FG, WIP and stock in trade, employee benefits expenses, finance costs, depreciation and amortization expense, and other expenses. These are all the expenses that we are going to consolidate here, and this is the total expense part. And the profit before exceptional and extraordinary items and tax is the difference of total income and total expenses, right? So if there is any tax income expense that we have to enter here, and we are going to find out the profit and loss for the period from the continuing operations, and EPS, which is basic and diluted. That's it. The format is very easy. If you work out 3 or 4 problems from this chapter, that's enough for this entire chapter. You can easily handle any kind of problem. That's how that's how these statements are. We can easily get no used with these formats, because these are all familiar formats. If you are actually learned financial accounting in 12th board, or in our college days, or in in CMA inter group 1 also, we have a financial accounting chapter, right? So if you are get familiar with that, this is very easy. Okay, so let's start with that. Let's start. Okay, I have given few numbers here, see, and here also, right? These are all for the structurized purpose to solve these problems in the quick manner. Okay, for equity and liabilities, I have put A. For assets, I have named it as, I've denoted it as B. For expense, I've denoted, for income and expenses, I've denoted it as C. Okay, A1 A1 denotes the shareholder funds. A11 share capital, A12 reserves and surplus, A13 money received against share warrants, A14 share application, SAMPA share application money pending allotment. A2 denotes non-current liabilities. You just put these numbers near like this. Okay, while we are reading the question, we can easily put this number here, and while we are solving the problem, this number will help us like anything. We can easily structurize this problem, and we can easily finish off this problem without missing any essential item which is required to solve the problem. So that's the purpose of this numbering system. I'll erase it, and I'll start from the start. Okay, the first item, the books of Supreme Limited. Let's put the name here, Supreme Limited. Balance sheet asset 31st March 2023, and this is 2023, and this is 2022. Okay, Supreme Limited, 31st March 2023. Okay, this is 23, this is 22. Okay, that's it. The first item which is given here is sales, right? Sales comes under revenue from operations, which is C11. Okay, purchase of material comes under cost of material consumed, right? So cost of material consumed is C22. Share capital fully paid up is share capital, which is A11. Land purchased in a year as stock, which is purchased of stock in trade. Okay, they are purchasing the land because they are running a real estate company. So purchasing the land is the stock for the company. So which is A12. Sorry, not A12. This is C21. This is C22. Okay, they are purchasing the materials, so that we are putting it under cost of material consumed, stock of material consumed. And the next, they are saying that they are purchasing the land as a stock, so that we are categorizing it under purchase of stock in trade, which is C22. Okay, landhold leasehold premises, which is asset, right? PPE, B triple one. See, B triple one. Okay, B triple one. Next one is creditors. Creditors comes under trade payables, right? Trade payables, which is A32. Then debtors is trade receivables. Trade receivable is B23. Director salaries, which is employee benefit expenses. See, employee benefit expenses, which is C24. This is also employee benefit expenses, which is C24. Opening WIP. Opening WIP goes to changes in inventories, which is C23. Which is opening WIP. Subcontractor cost is other expenses, which is C27. See, C27, which is other expenses. Equipment fixtures and fixtures and fittings at cost, which is opening PPE. Opening PPE, which is B triple one. Opening PPE. This is opening stock, which is C23. Change goes to changes in inventory. Okay, opening stock. Then P&L account, opening P&L, which is A12, which is reserves and surplus. It goes to reserves and surplus. Secured loan, which is long-term borrowings. Long-term borrowings comes under non-current liabilities. It numbered as A21, which is okay, bank overdraft. This is short-term borrowings, which is A31. Interest on loan and overdraft. Interest on loan and overdraft is finance cost. Okay, finance for the cost for the company, because we are paying interest, right? So which comes under C25. Depreciation on equipment. This is the provision. See, the credit item. So we have to, while we are reading the items, we have to check whether the items values are placed under debit side or credit side. So if it is placed on debit side, this is the current year expense. Okay, current year depreciation expense. So but here it has placed under credit side. So this is a provision for till date. So provision, which has go to B triple one. Okay, deduct administration expenses is other expenses, C27. Office salaries are same, employee benefit expenses, which is C24. So that's it. We have covered everything inside the trial balance. Let's go to trial balance outside the trial balance. Okay, stock on hand, including the land, is valued at 7,10,000. Okay, closing stock, closing WIP. To go to inventories, two areas. One is inventories, which is numbered as B22, and change in inventories, right? Change in inventories is C23. Okay, on 1st October 2023, the company moved to new premises. The new premises are on a 12 years lease, and the lease premium paid, the company paid the lease premium, which is 2,10,000. The company is going to use for a longer period. So we should consider this as a asset in our books. And the subcontractor label, which we spent 2 lakh as a subcontract cost, which has to be capitalized, and the materials used at cost of rupees 1,90,000 to refurbish the premises, which has to be which needs to be capitalized. Okay, these are to be considered as a part of cost leasehold premises. Okay, so the entire cost leasehold premises is 2,10,000 plus 2 lakh plus 1,90,000, which is 2,10,000 plus 2 lakh plus 1,90,000, which is 6 lakh. Okay, 6 lakh is the value of premises. This has to goes to P triple one, and this subcontractor labor rate. This subcontractor labor 2 lakhs has to be reduced from the subcontractor cost, and materials at cost of rupees 1,90,000, right? This has to be removed from the cost of material purchased, which is C21. C21 and subcontractor which is C27. Okay, since we have used this subcontractor labor and materials at cost for premises that we have actually capitalized, so we need to capitalize these cost also, this labor cost also, this uh, material cost also, so we need to capitalize. So we are capitalizing, right? Next, the review of data reveals specific doubtful debts of rupees 1,75,000. So they are asking us to prepare 1,75,000 as a specific debt. Okay, and general debt they are asking us to prepare to a percentage. Okay, now first debtors is comes under trade receivables, which is B23, and these two things has to go to other expenses, which is C27, right? And depreciation, which is depreciation cost rupees depreciation is C26 and B111 two. So generally outside trial balance items are comes under two places, so have two effects, so we are recording two effects here. Okay, Supreme Limited sued Shallow Limited for supplying defective materials which has been written off as valuables. We are Supreme Limited. Shallow Limited is some other company. They have supplied some materials to us, but that has defective material. So we have sued them, and we are very confident that Shallow Limited will agree to pay a settlement of rupees 2,50,000. So this is not sure. So contingent asset. Okay, we proposed dividend. This is contingent our liability. We are paying to our shareholders. Audit fee 1 lakh is to be provided as audit fee. This is to be provided. They have not provided yet. So other current liabilities, which is other current liabilities is C 833, and expenses, the expenses area other expenses, which is C27. A company will provide 10% of pre-tax profit as a bonus to employees before charging the bonus. Okay, before we provide the bonus, the company has calculated the profit till sorry till before the bonus charge. We have to give 10% of bonus to the employees. Okay, before bonus and provision for tax. This is provision for bonus. Required financial statements to prepare, and okay, they have asked us to prepare the financial statements for the year ended 31st March 2023, and you have to prepare the notes to accounts for the specific entries. Okay, so this is the entries we have to uh, work out while we are addressing the notes to accounts. Okay, I hope you guys have understood with this problem. Let's start notes to accounts. Always the first note is share capital. Okay, share capitals we are going from here. Now let's accumulate the figures to the notes to accounts to find out the specific categories values for balance sheet and profit and loss account. So the first note is share capital, which is share capital fully paid, which is 5 lakhs. Five lakhs is the share capital value. So authorized, issued, subscribed, called up, paid up is 50,000 equity shares of rupees 10 each. Rupees 10 is not given, we are assuming it as rupees 10, and our share capital value is rupees 5 lakhs, right? So 5 lakhs. So let's fill it up as 500. So they have actually given it as rupees in lakhs, right? 00. Okay. Reserves and surplus. Note 2. Is there any other item? A double one. A double one. No other A double one, right? That's it. No other A double one. Okay. Share capital. Next one is reserves and surplus. Reserves is reserves, general reserves and P and sorry, general reserve, securities premium reserve, revaluation reserves and all. Surplus is P and L account. Okay. So general reserve. Okay. What's the general reserve we have and what's the P and L account? Okay. Opening. These are all the two entries. Okay. General reserve. A12, A12, A12. So okay. A12. We have P and L account which is 640. Okay. 640. A12. Any other A12? Mm, that's it. We don't have any reserve for this problem. If there is any reserve, that has to be come here, and if there is any transfer to reserve, which has to be added to here and deducted from P and L. Okay, so if since that is not here, so just we are giving you I'm trying to giving you a format to and to cope up with any problems if they are facing anything in future. So if there is no transfer from P&L, so we are just putting 0. So opening P&L we got, and current year profit and loss should be added here. Okay, so that has to be come here. So this should be left unfilled. So once we are completed our P&L account, that time we have to fill the P&L sorry, current year profit and loss account, current year profit and loss, then we have to give the values here. Okay, so till then it has to be kept free. So note 3 is okay. Reserves and surplus over. There is, as we read the question, there is no share received against, there is no share received against share warrants and share application money pending allotment, and long term borrowings, which is A21, right? A21, A21. See, here it is A21. A21 is 560. Is there any other A21? No, that's it, right? So we can directly enter the A21 item, which is 560, or else we can create the note also. Long term borrowings, right? Which is secured loan. Secured loan rupees 560. So 560 has to come here. No deferred tax liabilities has been given. Other long-term liabilities, anything, other long-term liabilities, A23. Is there any other A23? No, 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 A23. Any A23? That's it, no A23. So we can go to other item, which is long-term provisions, A24. Is there any A24? A24. Okay, there is no A24. Okay, put dash and go to next, which is A31, which is short-term borrowings. Is there any A31? A31, yes, there is a A31, which is bank overdraft, which is 525. Okay, what's the note number for this? 1, 2, 3 and 4 for short-term borrowings. Short-term borrowings, which is bank OD. How much? 525, right? Okay, 525. Next, trade payables. Trade payables is A32. E32. Is there any A32? No, no. Yes, creditors. See, creditors. Which is 2315. Okay, 2315. Other current liabilities. Which is A33, right? A33. See, A33. Audit fee. Which is 1 lakh, right? 100. Let's create the, since creditor is more familiar with the trade payables, I've just directly put it here. But when it comes to other current liabilities, we have to definitely show the notes to accounts to let the people know, let the users know about the things. Note 5, which is other current liabilities. Audit fee, which is rupees 100. Okay, yes, given short term provisions, is there is any short term provision? Yes, there is a short term provisions for tax which has to be created. Note 6, short term provisions. Provision for tax, provision for bonus, right? So we have to keep the provision for both items. Provision for tax need will be found at the time of P&L, and the provision for bonus also can be found at the time of P&L, right? So just we'll keep this place empty. We'll fill it up once we get the values. So put it 6 and keep it empty, and let's go to the other items, which is PB B111. Note Note 7. Note 7, which is PP, right? So B111. Okay, how many B111? B111 is here. See, B111, 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 B111. So there are a lot of B111. Let's one by one we'll fill the values. Leasehold premises, which is 2,10,000, right? So this is the leasehold premises, which is 2,10,000. We have to capitalize the 2 lakh and 1,90,000 into that. And before that, opening PPE, how much is the opening PPE? Opening PPE is 1,320. Opening PPE 1,320. Add additions, which is 2,10,000 plus 2 lakh plus 1,90,000. 200 plus 190, which is 210 plus 200 plus 190, which is 600. Okay, 1,320 plus 600, 1,920 minus depreciation. Depreciation only for equipments at how many percentage? Equipment at 15% return on value, at 15 percentage. Okay, so to calculate depreciation we need to use the working note. Opening depreciation we have is provision for depreciation. Equipment balance is, which is 1320, minus provision for depreciation till date, which is 820, right? See, 820, 820. Then WDV of equipment is 320 minus 820, which is 500. At depreciation at 15% WDV, which is 75, right? So this is the depreciation we need to give here. So the total depreciation is 820 plus 75, existing, new depreciation. So if we total it, it comes around 895, and the PPE value is 1025. Okay, let's fill the 1025 here, which is 7. There is no capital WAP, there is no intangible assets under development. If there is any B12, no B12, yes, there is no B12. Okay, no B12, no deferred tax assets, long-term loans and advances. If there is any 14, B14, no B14. Yes, there is no B14. Okay, no B15 also. If there is any B21, no current assets. So B22, which is inventories. B22. So okay, inventories. Inventories, let's create the notes to accounts. Note 8, inventories. WIP, closing WIP, closing stock, which is 7,10,000, 7 lakh, right? 710, 1410. Okay, that's it. B22 is over. Just 1410. Note number 8. Trade receivable is B23. How many B23? See, here it is B23. If there is any other B23, so here there is one B23. Any other B23? That's it, right? B23. Okay, note number 9, which is trade receivables. Debtor amounted to 3675 minus provision for doubtful debts, which is rupees 1,75,000 is the specific provision, 1,75,000, and then 3675 minus 175, which is 3,500, minus general provision at how much percentage, for how much percentage, which is for 2%, right, into 2%, which is 70. So 3,430, this has to go to P&L account as other expense, which is the 27. Okay, That's a 3430, right? 34309. Then cash and cash equivalents, how many items? B24, 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 B24. That's it. There is no bank balance. Okay. Short-term loans and advances, B25. Is there any B25? B25. So there is no short-term loans and advances. Is there is any B26, which is other current assets? No B26, right? That's it. No B26 also. That's it. We have finished entire balance sheet. So we have to total once we get the values for provision and reserves and surplus, right? So let's get into the P&L account. Revenue from operations, which is sales. Sales is C11, which is 13,800. Okay. Other income, any other income? C12, C12, no C12. Okay, there is no C12. Let's total it up. Okay, cost of materials, which is C21. Okay, C21. And then there is any other C21, any other C21. See, here there is a C21, which is 1,90,000, right? So 690, 1,90,000, 6,090 plus 190, which is the, we can put it here also as a note. We will prepare a note. Note 10, which is cost of material purchased, which is purchase of material, which is 6,90,000. Then minus capitalized material, which is 1,90,000. So 5,900 is the total. 5,900. Note number 11. Note number 10. Okay. Note number 10. Purchase of stock in trade. Next, C22. How many C22? C22 is here. Any other C22? That's it, right? There is no other C22. So only one, which is 365. So let's directly put it here, C365. And then changes in inventories. Let's create a table for changes in inventories. Changes in inventories. WIP and FG we have, right? So opening WIP is how much? Opening WIP is 1,050, 295. These are opening values minus closing values. Opening value is 1,050, 295, right? 1,050, 295. Then closing value is 700, 710. Minus 700, 710. 1,050 minus 700, which is 350. Then 295 minus 710, which is 415. So plus 350, which is 65. 65 is negative balance. 65 minus 65. Okay, 11. Employee benefit expenses. Okay, let's prepare the note for employee benefit expenses. Employee benefit expense, which is, what's the code number? Code number is C24. How many C24? C24. Any other C24? See. So there are C24 3 items, C324 items there. And then apart from that, that's it. C24 is 3, which is 195, 555. Wages, director salaries. Then wages is 155. Then salaries. Salaries is officer is 90. And we are also providing the bonus for employees, so that has to be come here. So let's sort it up and fill it up later. Okay, 12. Let's put the note number here, just 12, and fill later. Finance cost is interest on loans and overdraft, which is 1,10,000. 110. Okay. Okay. 110. Okay. Depreciation and amortization expenses. What's the depreciation and amortization? Depreciation is 15%. So we are providing 75,000 of depreciation for the current year. So 75,000. Okay. Other expenses that has to be created with note 13. So usually other expenses will be given lot of informations. Other expenses. Okay. So what's the other expenses? C27. C27 subcontractor cost 4470. Subcontractor cost 4470 minus there is subcontractor cost has been capitalized, right? So how much is that? 2 lakhs 200. 4,270 is the actual subcontractor cost. Then any other C27. Administration expense 735. 735. Any other C27C? Provision needs to be given, and audit fee. Okay, right? Any other? That's it. Provision. How much provisions we have created here? Provision for bad and doubtful debts is 1,75,000 plus 70. 245. Okay, which is 175 plus 70. Then any other thing which is audit fee, which needs to be added. Audit fee is 100. So let's total it up. 4270 plus 735 plus 245 plus 100, which is 5,350 is the other expense, which is 13. 5,350, right? So we have over with everything, and we have to find out the bonus now. Note 14. 14 is bonus. We have to add the bonus also here. Okay, which is 14. Okay, so much so far our total income is 13,800, right? Minus total expenses still, which is 5,900 plus 365 minus 65 plus 110 plus 75 plus 5350 plus you are left with some other employee benefit expenses, right? Which is see, these three figures should be added, which is 555 plus 195 plus 90. So 12,575 is the total expense. 1,225 is the profit before bonus percentages. Bonus percentage is 10%. Okay, 10% as bonus, which is 122.5. So 122.5 is the bonus. Okay, so 122.5, 555, 195 plus 90, 122.5, which is 962.5. 962.5. Okay, any other provision for bonus? Okay, provision for bonus. Okay, let's put the provision for bonus here, which is note number 4, right? See, 122.5. Now we have to find out the provision for tax. So let's total it up, which is 5,900 plus 365 plus minus 65 plus 962.5 plus 110 plus 75 plus 5350, which is 122.5, 12,820 is the 12,820 is the total expense. So profit before exceptional items and extraordinary items and taxes, 12,820 minus 13,800, which is 980. Actually we made a mistake here, which is bonus has been actually already been added to the employee benefit expenses, right? They want, why do we need to add it again? So let's remove it. Okay, yes, we have removed. So let's find out the total expenses, which is 5,900 plus 365 plus minus 65 plus 962.5 plus 110 plus 75 plus 5350, which is 12,697.5. 697.5 minus 13,800, which is 1,102.5. Okay, minus, okay, dash dash dash. Okay, tax expense at how much percentage? Tax expense at 50% into 50%, which is 551 25 55125. Okay, no discontinued operation information, so 55125. So now 55125 divisible by how many shares? Shares is 50,000 shares, divisible by 50,000. Sorry, it is in lakhs, so 50, 551.25 divisible by 50, which is 11.025 is the EPS per share. Okay, Now we have completed the P&L item. So let's put the current year P&L here, which is 55125 and 55125 551.25. Okay, let's total 551.25 plus 122.5, which is 673.75. okay, let's put the 673.75 figure here, which is long-term provisions, right? Sorry, that's a short-term provision, which is 673.75. let's find out the reserves and surplus. There is no reserves, only we have opening P&L and current year balance, which is 640 plus 51551.25 1191.25. see, total P&L, resource and surplus 1191.25 1191.25. okay, let's total the figures now. 1191.25 plus 560 plus 525 plus 2315 plus 100 plus 673.75 5865. okay, 5865. okay, what could be the asset side value? 1025 plus 1480 plus 3430. okay, 5935. have we done any mistakes here? Have we added every information which we needed? So, okay, actually we might have made some mistake in equity and liability. Sorry, this is 1, not 8. okay, so that's it. Answer is right now. 1025 plus 1410 plus 3430, just 5865. So guys, the catch with this problem is the way we categorize it. If we categorize it properly, we can easily solve this problem without missing any individual items. We can without stressful, and we can easily balance this balance sheet and finish this sum and get the 14 marks entirely. So that's it. So let's get a grip over this numbering part, mnemonics, lullabies, and then first approach to trial balance, which affects two items, and inside trial balance affects one item for one place. And slowly start with share capital, and then note resource and surplus, and slowly go by each item from the balance sheet. okay, and slowly build the values. okay, that's it. Thank you.